Good morning, good afternoon, good evening, depending where you are on the planet. And welcome to the first webinar, the first bull versus bear webinar of 2023 with tradeday.com. Steve Miley on the call here. Welcome, everyone. Happy New Year and all of that. Let's make it a great trading year. Okay. And yeah, good luck with all your endeavors this year, everyone. It's going to be a good one. And Trade Day, I've got lots of exciting things to offer. Updates coming in January, so keep your eyes peeled for those. You won't be able to miss them because we'll be doing a big song and dance about it. But yeah, we've got some updates, got some changes coming. Hopefully into the second half of January, so keep an eye out for those. What else? There were some issues, not from our doing, from created by Tradeovate, the API with Tradeovate. There was an issue. Actually, fortunately, it was when we were off between when the market was closed, after the close at the end of the year, before we reopened today, or last night. So the market has, that issue, as far as I'm aware, has been resolved. So you should all be okay with your trading and with your dashboards and your memberships. And where there have been any memberships that haven't been renewed on the subscription, not so much the subscription renewed, but if you haven't had an auto reset, please do contact us and we will do a manual reset for anyone who didn't get an auto reset on their subscription renewal. And again, not our problem. Well, it was our problem, but not our fault. A change in the API from Tradeovate, which we've had to deal with. But as far as I'm aware, all those issues are now resolved. If you do have an issue, please send a ticket or please send an email to support@tradeday.com. Right, let's get on with the webinar. I'm not going to focus hugely on the technicals today because there's kind of quite a bit to get through on the fundamentals and on the calendar for this week. I'll just dip very lightly into the technicals and then we'll go through more of a technical run through going into tomorrow. And so what do we have? Well, obviously, even though the US and UK and various other nations, you can see here, closed yesterday for the New Year's Day holiday on the 2nd, Europe was open. And Europe did manage to put in a solid day on the stock indices. So the French and German and pan-European equity indices posted strong gains of around 1% yesterday and a higher again this morning. We also had manufacturing PMI data out for France and Germany and Eurozone yesterday, mixed. And then overnight, we've had Australian and Chinese in here. And importantly, the Chinese only just beat the Caixin manufacturing PMI data. So that's certainly a positive. And that's lifted markets still further this morning. We also got German unemployment this morning. There's a little article on that we'll come to shortly. That beat expectations. So again, a positive. And even though this German CPI data you can see in here hasn't been released yet, that's coming up on the hour. So in about 26 minutes time, we have this German CPI number. What we do have is they release it state by state. First of all, Germany split into different states. Large states, there's only a few of them, and in inflation in the key 5 of the key German states was reduced. It eased for a second month in a row in December, indicating national inflation may also have slowed. Okay, so we're watching out for that data, but at the moment, that data, not been released yet. The Germany as a whole. Here are the numbers here, but we're looking for that to continue to further ease. So that's a positive as well. So you've had basically a start to the year. We've seen mixed data from PMI from Europe yesterday, but the markets went higher anyway. The PMI data from China overnight, positive, lifting European markets. And On the back of that rally we saw yesterday and again today from European indices, US futures pointing higher. We've also had the positive German unemployment data, and there's an article on here as well that German unemployment falls in December. So again, the market rising on that. So we're in risk on mode as we start the year. The other thing to point out, I want to take a look at it when we look at the charts, is more often than not. So the Santa rally that a lot of people talk about, the Santa rally, that Santa rally usually sometimes happens before Christmas, in the run into Christmas, but it's often in the days in between Christmas and New Year. And we have what's called a lot of window dressing going on. So markets are pushed higher by fund managers who come in and buy the market because they don't want to be underweight going into the end of the year. And also it obviously helps them if the market is higher. So we often see a lot of window dressing and the market's pushed higher between Christmas and New Year. So we get a higher close. We didn't really see that. The markets were very subdued between Christmas and New Year. Usually you get them chopping around a lot. There's less liquidity and they are open to a bit of manipulation. We didn't really see that. So, but what often you get is you get this kind of Santa rally between Christmas and New Year. And then that's kind of like a fake move, right? So it's artificial move being driven by players in the market. And then what then we get is a reversion of that. So the market in the beginning of the year often retraces that for the first couple of trading days of the year. Not always, but that happens more often than not. Excuse me. But because we didn't see the rally at the between Christmas and New Year this year, the markets were very, very much sideways. Then you haven't got that kind of reversion that needs to be done. So, and then obviously we've had this more positive tone that we've had come through. So markets have actually seen a decent rally. So we haven't had that reversion back lower. So what have we got coming up for going into? Well, it's a really busy week actually on the data front. So we do get, because we got some of the PMI data yesterday, we've actually got the PMI data coming through. Where are we? So we've got US manufacturing PMI. Now remember, this is from the S&P Global data. Okay, this is not the main one, which is So this is for the euros. Sorry, for the rest of the planet. This PMI data we're seeing here, which is the S&P Global data, is the more important data. Okay, for the US, however, the ISM data, the Institute of Supply Managers in the US, is the more important data. But we still get this S&P Global data that comes out today. So that's at 9:45 Eastern, and get Canadian data before that. And as I say, in just over 20 minutes at the top of the hour, we get this German inflation data. So all that's going to be worth noting going into today. It starts to get more exciting as we go through into tomorrow, when we get we have French CPI data, so that's going to be worth looking at. But then we get composite and service data out of France and Germany tomorrow. So you get the second lot of data. So remember, they've already had their manufacturing data. You get the composite and service sector data coming through from Europe tomorrow. And then as we move through the day, then you get the ISM data out of the US tomorrow. So that's going to be certainly a big focus going into tomorrow. And even more importantly, so that's at 10 o'clock a.m. Eastern time tomorrow, the ISM data. Then we get the FOMC meeting minutes released. So we'll certainly be keeping an eye on that at 1400, 2 p.m. tomorrow. Then as we move through into Thursday, a day later than normal, normally this comes out on the Wednesday before the employment report. Because we had the holidays coming now on the Thursday, we get the ADP, non-farm employment. So this is the guesstimate, remember, the guesstimate of the official employment report, the non-farm employment report that we get on Friday. And as I say, as we go through, we also get the S&P Global Composite and Service Sector PMI data coming from the US on Thursday. And then on Friday, all eyes are going to be, we do actually get Eurozone CPI, but all eyes are going to be on the US employment report. We also get the Canadian employment report as well. And then we get the ISM, also non-manufacturing data as well. So you get the on back here on Wednesday, we get the manufacturing report, ISM manufacturing, and then we got the non-manufacturing on Friday as well, the ISM data, which is the service sector data. So it's a super busy week. Starts off a little quiet. We've had some decent data though out of Europe this morning, but then from tomorrow onwards, we're starting to get a lot more significant data coming through, and particularly from Wednesday, Thursday, Friday, a load of data. So a really busy week. So it could be a little quiet. We're going to open up higher, obviously, on the futures. The cash market's going to open up higher into today. On the equity side, it may be a little bit of a pause once we move to higher. Or first trading day of the year, we could rocket higher, or we could retrace that back lower. So, first trading day of the year as well is going to make it today still interesting, even though we've got a whole string of data coming later in the week. Could be more of a pause session Tuesday, not as important data coming through Tuesday. And then Wednesday, it gets quite spicy again with the various PMI, the various the Fed minutes, and the employment reports that we get. Okay, let's move on. 5 things to start your day in here from Bloomberg. So just basically saying, what's 2023 going to bring in here as we get potential recessions hitting this year, an expectation for bonds and stocks to re-establish their inverse relationship, having been mostly positive early correlated for much of 2022. Michael Burry of the Big Short fame in here, adding in his skepticism of, so basically US recession is going to be coming, and then the Fed cutting and leading to a new spike in inflation, according to him. Markets are up overnight on the back of the European gains that we saw both yesterday and today, and the focus today, final reading S&P Global's US manufacturing. We've already spoken about that coming up. So just to run through a few articles in here, futures climb with stocks and China recovery bet. So that's the China of the positive data. Tesla put out some delivery missed data, so Tesla down. But yeah, we're up on the back of China's recovery and that positive data we had out of China, and also the German employment data this morning, as we've already mentioned. Oil declines with focus on stronger dollar and China outlook, though. So I don't see a strong China as China is the world's largest computer, reopens its economy. But oil declines are pressured by a stronger dollar. So the dollar has rallied so far this year. I'm going to share this one. I haven't had a chance to go through this yet. Here's almost everything Wall Street expects in 2023. I haven't had a look at this yet, but I'm certainly going to be going through this later on. I'm going to put that in the chat now. Hopefully you guys can access that as well. But basically it's a rundown of what we're looking for from various different Wall Street players. What else do I have in here? Fear of global gas crisis. So this is helping markets broadly as well, is the fact that we're having the beginning of the year and over the holiday season, and the outlook for going into mid-January is for very mild weather across Europe and China, okay, over the next few weeks, okay. And obviously with the kind of the height of the potential winter at the moment, and so gas rationing unlikely as top importers have built strong stockpiles. So this gas crisis, this kind of electricity price crisis that the market had been kind of anticipating, that's easing. Gas prices are falling as the forecast for the beginning of 2023 is for milder weather, and we're having super mild weather in the UK and in Europe at the moment. European cities break temperature records as warm winter holds. Okay, mild weather is set to continue easing regions' energy crunch. Lower natural gas demand has driven benchmark prices down. So gas prices have fallen over the holiday season and continue to fall. European gas declines on persistent mild weather curbing demand. And then recapping some of the stuff we've already gone through. European shares rise with focus on German inflation. So we said that German regional data has been positive. We've got in about 16, 17 minutes now, we get the German data. Oil stocks for us, London shares for positive. So oil stocks were higher this morning, helping the FTSE higher. We've already spoken about the inflation data in key German states and the German unemployment data we've already had this morning. Futures rising in the US. On the back of European and Asian gains. And you can see in here, remember, Europe was already up yesterday. So the DAX was up about 1% yesterday already, up another 0.7 this morning. The FTSE was closed yesterday, is up 1.5%, playing catch up. The CAC was already up yesterday about 1%, up another 0.5% today. So these markets are up about 1.5% across the board since the beginning of the year, depending if they were open yesterday or not. They're up about 1.5% in Europe. And if we go to US bourses in here this morning, going down to the futures in here, we're up about 0.5%. between 4/10 and 6/10, depending on the index for the Dow, S&P, and the Nasdaq this morning. So all looking fairly positive. I'm going to just do a quick nod to the markets in here. So at the moment, we have nudged higher in here. It's been an erratic session to start the day for the S&P, and you can see there's that sideways activity, very non-typical in here through the holiday season. The market really didn't do too much, and we're actually, if you look in here, so this trading session we saw on the 22nd, which is like the final full trading session of the year, because I think the 23rd was a partial, as I remember. But the 22nd, we had this big whipsaw day on the 22nd, and you can see the market has been confined. We're inside that trading day's range. So really we're waiting for a breakout above or below that range. In between, it's just kind of noise. I mean, in my reports in here, I came out with a slightly more negative view, but kind of shifted with the little push above that little peak there, probably shifting that to slightly more positive going into the day. But really a breakout, you're really going to need to get back above the high there at 37.88 and a half. I think that's right. No, sorry, that's completely wrong. 39.19 and 3/4. Only up through there sees this shift to significantly more positive. So it's really up through there. And if we look at the 15-minute chart, you can see really, it's been a chop fest in here through the holiday season. So it really needs to get back above there, And at the moment we did have we were much higher in here this morning, and we've set back from that. So no real strong view in here. That's why I'm not going to spend a lot of time on the charts in here going into today. We did get a more emphatic push higher. If we go back to in here, we're still below this peak in here on the Nasdaq. That's from the 27th, 11,183 and 3/4, and we sort of stuttered back from there. So kind of a little bit indecisive going into the first trading day of the year. I've got no real strong view, hence I'm not going to go into much more detail. Here we are on the 15-minute chart. It looks like you've got a small base in here, but really needs to clear above that peak there. We kind of just nudged that peak there. No, we're not quite got above that peak there. So really you need to get through there. 11,183.75. Only up through there signals a more positive tone for me. Then you got a small basing pattern. Let's take a quick look, gold, oil, and the treasury market in here. So I'll look at here's oil first of all. Again, kind of sideways through the holiday season. We've dipped back lower, having just made a new recovery high this morning, dipping back lower. Again, no massive strong view on oil. It's sent a more positive. The underlying theme is more positive, but we're down on the day, and we go in here on the 15-minute chart. This sell-off that we've seen in here overnight, making markets look a little bit more negative. This is in the European morning. We've seen this setback in here, but the underlying theme is for recovery. So kind of no strong view there on oil. Go take a look at gold. You'd have to say gold, we've broken out to the upside. It's been on this kind of very grinding higher. We've broken to the upside, but then you've got a failure session so far today. So the market, this at the moment looks like a shooting star, a negative candlestick. And again, you go into 15 minutes, even though it's more positive, we've had a setback. Now, for most of these markets, I've got an underlying bullish theme. So still with stocks, with oil, with gold, there's an underlying bullish theme. However, the market's kind of showing some indecision as we start off the new year. So really difficult to get a gauge on this at the moment. You mean you hold a gun to my head on stocks, gold, and oil? I'm bullish, but I'm bullish like 55-45, nothing more than that. Now, I don't really want to entertain taking a trade unless I'm more like 65-35, right? You're never going to be much more than 70-30 on your how strong an opinion you have, really. But I mean, for me, I want to be at least 65-35. I'm like 55-45 bullish. I wouldn't be entertaining until I get more of a signal from any of these markets. And finally, I'll go to the 10-year note in here. And again, look, been in a downtrend, but you've saw a turning point at the end of last year and then up this morning. So you're kind of turning the downtrend in here on bonds. So difficult to sort of to say whether you're bullish or bearish in there on bonds. I'd be slightly bullish on bonds given the turn we've seen, but not aggressively bullish. So I think charts not really helping us out too much as we go to the start of the year, looking for directional bias. And we've got a lot coming up. So that's why I said today's kind of difficult. We've already had a spurt higher. We're going to pull back and retrace that. We've got a lot coming up Wednesday, Thursday, Friday. Not so much. Wednesday, Thursday, Friday. Not so much today as that important. We've got that PMI data, but probably not as important. But Wednesday, Thursday, Friday, we've certainly got a lot of data coming through. So it might be a relatively indecisive start to the year today. But if you do get a breakout of any kind of support resistance levels, I would simply say to go with those breakouts. Okay. So I'm going to leave it there. I'm going to wrap it up there. I'm going to wish you all a great trading day. If you still do have any issues, but we think most of those issues have been sorted out now. They should have all been sorted out. But please do email us at support@tradeday.com. Going to wish you all a great trading day. Keep it a little bit careful in there today, guys. Yeah, keep your powder dry. You don't want to fire off everything at the beginning of the year. Let's see how these markets develop. Let's see how the cash market opens. Let's see how that PMI data comes out. We do have a lot coming up in the rest of the week. So, just try and stay focused on what we've got coming up. There's going to be lots of opportunities Wednesday, Thursday, Friday. So don't go blowing accounts in here today. All right, guys, have a good one. Take care, stay safe, and I'll be back with you with another bull versus bear webinar tomorrow. Bye.